Hi, welcome to the market alert for Tuesday the 16th of December 2014. And starting off with the 5-minute chart, there's the big picture of yesterday. We can see we had a short and a long, both successful trades. But let's have a look at a bit more of the detail. And what I'm going to do is just to expand the price bars out a bit so you can get a closer look at those pertinent points that were relevant to yesterday's trade. So first of all, we see the market sideways to higher pre-market. So you can see the market trading above the 17,350 psychological line there, that grey shaded line. We then see professional buying coming into the market, followed by some potential weakness, followed by further potential weakness because this market traded up to the 17,400 level and failed to hold. And again, you can see the volume very high in this bar as it was in the upthrust there. Telegraph pole, further weakness, again an increase in the volume there, and then we see the potential sell signal there, which I will just mark up for you. And as I said in yesterday's market alerts, that if you actually have a entry price below the psychological lines, it's always a better place to have one. So we see the market opening, moving down, filling the order, and then coming back to close above the psychological line and the DP. But because of the weakness that we see in the background, this market is short at the moment, and therefore we see the selling coming into the market with prices trading down straight below the scalp there on professional selling, which is what we want to see. Some potential weakness comes into the market, and also this is followed by buying, but then we see the market come back towards the break-even area there and then continue to move lower. Now, as I've said in many market alerts now, and I'm going to say it again for the purposes of repetition and for clarity, that the psychological lines are extremely powerful, and you can use these to maximize the potential profits in a trade. So here we have the entry price down towards the psychological level. So instead of the 20 pips, there are 47 available here. We see the market continuing to move lower. The market has now closed below the psychological level of 17,300, and we see the market trade down all the way down to the 17,250 level, which is in here. So again, the market continuing to move lower until we find support at the 17,250. We see the market trade back up, and then you see this buying coming into the market here, and then we get a straight reversal on it. Now, what's interesting here, let me just get rid of this, and so you can get a bit more of the screen there. So we see the professional buying coming into the market. We see prices closing back above the 17,300. But then we get a straight reversal. And what's interesting about this are two things. First, the market opens, reverses, and goes straight down and closes on near the low. We've got the professional selling there. It's back below the psychological level. But more importantly, if you look at the volume figures in this one, we have 321 ticks of volume. And in the professional selling bar, we have 335. So we know there's definitely selling pressure around. So the market continues to move lower. We then see the market being tested at the 17,250 level. The market fails to close above this, even though we have an increase in volume. So the market then continues lower. We see the market taking out the 17,200 and then on and all the way down till it closes below the 17,150. And again, with the nuances of volume, if you look at these two price bars at this turning point, we have the volume of 367 in this bar, and in this bar we have 371, and we can see that the range is narrower than the previous bar, which means there must be some buying pressure in the market, and we then see prices move back to the upside there. We have an upthrust here, again at the psychological level, and we see the market move down 50 points from this. See the market then trading sideways, hugging the psychological level of 17,200. Eventually the market is brought back. Again, we see some buying in the market, but the market failing to close above the 17,250. 1 point in the buying bar, then the market reverses, and then we see the selling come back into the market until we have a potential buy signal here, again closing back above the psychological level, and we see the market trading up to the 20-point scalp there, which is just below the previous day's low and the psychological level there of 17,250. So once you get used to reading the markets, the price bars, the psychological lines, you can see how easy it is to predict where the Dow is likely to trade to. And that's precisely what we saw here in this bar as well. We didn't quite make the 17,250, but we were heading back to where there was selling to the left there, so an indication that we could see further selling coming into the market, and that's precisely what we did. And again, you see the market finding support here. The volume in this bar is 247. In this bar, it's 208, but the range of this bar is narrower. So there's no surprise actually seeing prices being moved back up to the and through the 17,200 there because of these nuances in the volume. Once you train your eye to see these small tactics by the professional money, then you can actually pick any bar and trade the market where you've got this situation of them buying back the market but it not being necessarily highlighted in the software. So in the daily chart, what started out as the market moving higher failed, and prices reversing, moving lower, trading down, making a new low for the last few months, and this morning prices sort of sideways to higher. Now, news-wise, today we've got quite a bit, but all of it's out before the Dow opens, apart from the flash manufacturing PMI, which is out at 245. But tomorrow, if I recall, we're at that time in the month where we will be seeing Yellen speak tomorrow and Thursday as well, so keep an eye out for that. But again, bring that to your attention tomorrow. So I wouldn't be surprised to see a bit of strength coming back into the market. So I did read earlier on this morning that they're going to start to be using some sort of language of continuous lows in interest rates, and just to give the market a boost. So watch out for the sort of language they're going to be using as well. So that's it for the daily charts, and the implied volatility yesterday dropping down from the 17% area, 1761 down to 1658, even though the market, the underlying market, actually moved lower. So again, perhaps an indication that the Fed is going to be using some sort of consoling language for the market to boost prices in the final week till Christmas here. And historic volatility up 83.4, and again that just showing that it's come down slightly during yesterday's trading session. And just before we conclude, whilst editing the video, I noticed an omission on my part. I didn't look at the volume, probably because it's slightly a light grey here, but the volume for yesterday on this price bar, which is indicative of a pogo stick type price action, you can see there the volume is very high indeed. So I wouldn't be at all surprised to see some sort of support coming into the market at the moment. Right, that's definitely it for this morning's market alert. I will see you in tomorrow's. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. I shall see you in the next one.